Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you Wednesday, February the 12th. The year's 2020. Let's talk trading. Waiting is not the same as doing nothing. Many times, people confuse the two. Waiting can be an active process because while you wait, you're preparing or you're making sure you're prepared to take action when the time comes. Whereas doing nothing is just kind of doing nothing, just kind of sitting there twiddling your thumbs, not focused, not paying attention. Random thoughts pass through your head. You're not doing anything. You're doing nothing. You're probably relaxing. But in trading, you wait and then you see your entry. Then you enter. Then you wait and then you see your exit. Either it's your stop loss getting hit or you see a price stalling and you decide to take all or some of profit. So waiting is definitely an active exercise in trading. If you're just sitting there staring at the screen, but you're not going over your trading plan, going over what you're going to do if this happens or that happens, looking at your exit playbook if you're in a trade and making sure your actions are in alignment with your plan, then what are you doing? You're in a trade, your money's at risk. And of course, if you watch my videos, I know you have your stop loss in place and your position size is correct. So you don't lose any more on any particular trade than you're willing to lose on any particular trade, right? We don't have to talk about that anymore. Yeah, we do. Every day, we do. Okay, boys and girls, fellow traders, just remember these videos are for educational purposes only, and your results may differ from mine. And that trading's very risky and you can lose all your money. So if you're seeking trading advice, financial advice, investment advice, seek it from an accredited financial professional, somebody with a certificate on the wall that states they're an accredited financial professional. That way, if you take their advice, use their methods or system, and you lose all your money, you know you got your advice or method or system from an accredited financial professional. Okay, disclaimers done. As you can see here on the weekly chart, all the gaps have filled. They were all filled yesterday. So you'll have to wait till next week to do that trade. And right now, the price on the dollar yen is 1 pip above the previous week's high. So we broke out of that weekly candle and 10 pips off the weekly high. So it looks like there was a chance to pick up 10 or 11 pips if you nailed the exit so far today. On the yearly, we're up 130 pips from the open. On the month, $164 yen. And notice once again, we're hitting in these wick zones right here. So you might want to look for a reversal opportunity. And we started off inside the opening range for the week here, but once again, we broke out. And so if you took that trade, you'd be up 15 pips if you're still in it. But it looks like you had a chance to actually pick up about 26 pips or so. Let's see, high off the close. Yeah, looks like we could have picked up about 26 pips. And looking here, let's scrunch down. You see here, back into the buy zone for the week. And there was an opportunity to get back in and have a nice gain. The inside bar, once again, is the same as the opening range. So we've already gone over that. Still some inside bar opportunities here. On the daily range, we have 6 pairs over 100. We've actually got 2 pairs over 200. Now look, they're both New Zealand pairs. And look at the range off the open. Now there was something I wanted to mention here, I forgot. Notice here the euro pairs, how far they're off the weekly open. You can see there's a couple of other pairs, but definitely the euro pairs have been beaten down. That's just, some of the things you might want to look at when you're analyzing. Monthly H1 highest open 8 hours ago. Price pulled back. Monthly D1 highest open here. Daily highest open. So you can see how price is reacting around those 2 levels. We took out the pivot point. It was very close to the open, about 5 pips. 4 or 5 pips there. Looks like easy pickings. On the rat zone, you can see the new beast, the pound New Zealand, drop down, put in a rat zone, and then there's opportunities to make money. Right now, 67 pips off the low. We saw we took out the pivot, but we still haven't hit that weekly pivot down here. It's Wednesday, price is moving up. Let's see if we get a Wednesday night or Thursday reversal on price. Once again, we took out that daily pivot. And as I state every day on the price action chart, right now, dollar yen has a range of 37 pips. It opened here. Price is not going to stay between the 70 and the 80. You see here, it opened here. It's not going to stay between the 80 and the 90. Okay. See, price opened here. It's not going to stay between the 10 and the 20. I mean, you can do this all day long. Of course, your results may differ from mine, boys and girls, but this is just simple. It's logic, it's physics, it's math. I mean, it's geometry. Price just isn't going to stay between these levels, and the longer it stays, usually the more violent the breakout. I mean, right here, it stayed between this level 1, 2, 3, 4, 5, 6 hours in a row, and then it broke out. Right here, it stayed in this level 1, 2, and then it did break out, pulled back in, and came out again. It's just the nature. I mean, you can do this with any pair. We can look at the new beast. I mean, especially the new beast. Look at, it's got a huge range for your Euro traders. Same thing. Here we go. 1, 2, 3, 4, 5, 6 hours in there. Then it broke out, opened here, had to move out, and then the same thing. It price just doesn't want to stay between these two lines. And I know people go, well, it can't be that easy. Well, it's not necessarily easy, but it's simple. You have to have your stop loss in place. You have to be there to take the trade. You have to be patient enough. I mean, okay, price closed here. You could put your buy stop and your sell stop orders in. I mean, it's pretty much that simple. This isn't rocket science at all. Wick zone in and out. Price doesn't like staying in the wick zone usually. And right here, horizontal lines, just going with candle color. Once again, 37 pips. You should be happy with 5 or more. The Einstein line, you can see since I opened, no real triggers yet. Price just hasn't been moving much. Ditto on the tick chart. You can see here just a small oscillation. Notice price got into the upper ATR zone, and what happened? It reversed, came down and actually penetrated below the open plus half the minute ATR. There would have been a nice place to take profit on the short, and on the long, a nice place to take profit here as it entered and came back out. I mean, this is, people can say Harry hindsight, but this is what we look for and do every day. There's no hindsight. None at all. Some trades are winners and some aren't. Look at the daily. Here on the yen, higher high. On the weekly, a higher high. You can shift over here. You can see new high. But then again, as we saw earlier, we're getting into those pips, but still there's this gap right here that needs to be filled, boys and girls. I don't know if it's going to do it this week, next week, or sometime later this year, or maybe not till next year. We just have to wait and see. And let's just look at the new beast. You can see here it broke out the previous day's low. Nice move to the downside. And on the euro, it also broke out of the previous day's low. Nice move to the downside. Actually had a higher high, so it put in an outside bar and a lower low. Lower low on weekly and on monthly. And I can't remember where I was in price yesterday, but I said it's not going to stay between these two lines. It's going to break out. That's just price action. It's just going to keep crisscrossing these lines. So you look for the closer ones. That's going to be your breakout. So here, there was a low when this candle, and it broke out. There was a high, it broke out. Right now, we're working on an inside bar on the hourly on dollar yen. So, fellow traders, just remember that waiting is not the same as doing nothing. And, with all the different indicators out there, not just mine, but there's plenty of times where if you've analyzed the chart and you want to know where you're going to go long, whether it's, at the sweet spot lines, every 10 pips or at highs and lows, you can, those levels in advance. You can stick an alert, that price and an indicator for that particular pair, and then you get alerted, or then maybe you put your trade on manually, or you can put in your buy and sell stops ahead of time. So, it's not what you trade, it's how you trade it. So go out there and drain the banks. And if you haven't subscribed, come down here, click subscribe, click like, okay, click the alert bell so when I put out the new video, to go watch it. And then, hit the share button, copy that, and paste the link to the video all over the internet. Okay, that's it. TheRumpledOne signing out.